And then you had this Trump post on Truth Social, and you had an immediate swing higher. It was basically talking about three specific cryptocurrencies, XRP, Sol, and Cardano. Then basically came out afterwards and was like, oops, sorry, forgot to mention Bitcoin and ETH. Want to throw those in there too.
I was surprised to see those names. I would have expected only Bitcoin, to be honest. Because you've got to ask yourself, look, what's the point? What's the reasoning for a crypto reserve, right? And if it's similar to gold, if the rationale is similar to gold, then outside of Bitcoin, what are you doing holding these other assets?
Today's episode is brought to you by Babylon Labs and their vision to build a Bitcoin-secure, decentralized world. They're pioneering the future with the world's first trustless and self-custodial Bitcoin staking protocol, allowing Bitcoin holders to stake BTC on POS chains, L2s, and DA layers without relying on third-party custody, bridges, or wrapped assets. Learn more at babylonlabs.io. Welcome, everybody, into another episode of Coinage. I'm your host, Zach Usman, coming to you live from our Brooklyn studios here in New York City, recovering from the week that was out in Denver at ETH Denver. Plenty of swag, but plenty of storylines to follow here on our Monday show. And very happy to be joined by Imran Lakha, Options Insight founder, here with us today. Imran, thanks so much for joining us, man. Appreciate it.
Thanks, Zach. Thanks for having me.
Yeah, it's obviously a very interesting day and a lot to dig into when it comes to price action because over the weekend, as Eric Trump was just celebrating that it was announced over the weekend, you had President Trump talking about crypto reserves, and we're going to start the show there, Imran, because it was a huge swing to the upside. Just looking at the charts over the last week, we were down pretty bad. And then you had this Trump post on Truth Social, and you had an immediate swing higher, but some of that being given up right now. So kind of just to start, Imran, what'd you make of that over the weekend? How little we got?
It was wild.
And then you're kind of giving back some of the swings now, but what do you make of it?
Yeah, I mean, the market was pretty fearful though, right? Last week, we were breaking some big levels, down there below 80K, and people were like wondering, okay, do we have to test 70K now before this thing can recover? So people were getting pretty nervous. Obviously a bit of shorting going on as well in the futures. So we were kind of primed for a squeeze. We just kind of needed a trigger. And then he comes in and says strategic reserve, which is what everyone's waiting for, that sort of announcement, and away we go. Obviously, the fading back of it now isn't a massive surprise just because nothing concrete has been announced. It's just words, it's just promises. We've seen this before. Last year, we often saw, I think it was at Nashville, right? Everyone got really pumped about some announcement on the strategic reserve, and then nothing really happened. So we've seen this story before. Now that we were coming from a slightly different place, that the market was kind of a bit spooked last week. So therefore the reaction was probably a bit of short covering and a bit more dramatic. But, I think it's probably, maybe it's a grind higher between now and the summit at the end of the week, where they're actually then going to announce something, I imagine. And gun to my head, I would probably say it's probably going to disappoint the market at the margin, right? But from these levels, we're kind of a bit more mid-range now. We'd probably need to rally a bit more for the market to then be in a position to get disappointed.
Yeah, I mean, it was pretty interesting to see. I mean, you're right to point out that we were down there. We broke 80, and on the ETH side as well, things were looking pretty bleak out at ETH Denver. A very interesting vibe on the ground there this time around. A little bit, I guess, muted in terms of excitement relative to prior ETH Denvers, I would say, and that was kind of, I think, some of what other people were saying as well. In general, though, I mean, I would agree with you in terms of the idea of this announcement, which was really kind of a nothing. Texas, I don't know if we have the Truth Social post that we could bring up, but it was basically talking about three specific cryptocurrencies, XRP, Sol, and Cardano. And then basically came out afterwards and was like, oops, sorry, forgot to mention Bitcoin and ETH. Want to throw those in there too. I'm not sure. I mean, obviously, if you pull up some of the other charts, look at Ripple's, a huge swing as they they topped $3, I think is what someone was saying. I mean, what do you make of that? Because that was kind of the new piece, was seeing some of those names that hadn't been mentioned before, Solana, Ripple, Cardano,
I was
What'd you
I
make of
was
that?
surprised. I was surprised to see those names. I would have expected only Bitcoin, to be honest. Like the fact that the fact that they feel that they have to hold reserves in the other assets is a little bit surprising, right? I mean, because you've got to ask yourself, like, what's the point? What's the reasoning for a crypto reserve, right? And if it's similar to gold, if the rationale is similar to gold, then outside of Bitcoin, what are you doing holding these other assets, right? It doesn't really make a ton. They have, I mean, they might explain it and lay out what the rationale is at the end of the week, but yeah, it doesn't make a ton of sense, right? To me.
No, I would agree. I think I was also very confused as to why why Cardano and I mean Ripple I suppose makes sense. We've seen Brad Garlinghouse really try hard to lobby, and the rest of the Ripple team really try hard to lobby in meeting with President Trump over the last few months, and so maybe not too surprising to see that one thrown in there. Cardano, on the other hand, I mean Charles Hoskinson, I think has also been trying to lobby as well. Um, but I would agree. I don't know if that fits kind of the rest of things when it comes to the idea of a reserve. But someone certainly knew that this news was coming, and I want to talk to
Mm.
you about that too, Imran, because we did see one trader. I think they netted like $7 million, put a trade on with 50x leverage right before this post came out. A lot of people on Twitter were talking about it, saying, "Hey, this is an unusual options action or unusual levered trading action around something like this." I mean, how unusual is it to see a 50x levered bet made right before an announcement like that?
Yeah, that looks very suspicious, and the reason it's not just the timing of the trade that makes it suspicious, right? Because literally, we've just had a week where crypto's been flying around 10% in a day, right? And the leverage that they're getting on here means that they'll get liquidated in a 2% move on that trade, right? So you have to be the level of certainty that you must have. Well, it's either certainty or stupidity, basically, right? But the level of certainty that you must have to put on a trade that if crypto pulls back 2%, you're stopped out, right? Or you're liquidated because I think that's what I read. It was like 4 million at
Yeah,
risk, basically.
yeah, it's
For
crazy. I mean, if I'm looking at this, it's a $72 million long position and a $123 million long position underneath both 50x leverage. And the block was writing about it too, saying that they would have come pretty close into getting liquidated on that one, but knew. And I don't know, it just raises more questions around kind of the insider information that a lot of these people attached to what's going on with Trump's posts might have, some unfair advantages when it comes to trading those.
Yeah, and the problem as well with this sort of action is that it kind of goes against the whole deregulation story, right? So it's like we want deregulation because we want the space to grow. But if this sort of behavior is now happening again and again and again, then it's like there's going to be more calls for more regulation, right? So it's it feels like something's missing here. Like they're not getting the fact that messing around with these crazy meme coins and letting people lose tens, if not hundreds of millions on those pump and dumps, and then this sort of insider activity, it's going to put a lot of question marks around it, right?
Yeah, no, I would agree, and I also feel like I don't know. I would also agree that maybe some of the moves that we've seen in Cardano, XRP, and those the like that are tied to this. Uh, I don't even know if I want to call it an announcement because it wasn't really announcing anything. Just kind of a mention of those cryptocurrencies potentially being included. I feel like we're both on the same page where it's kind of like, buy the rumor, sell the news. Now the news is kind of soft. I don't know what's going to happen with those ones, but considering they ran up like 30, 40, 50%, you might want to kind of maybe take those profits and call them there. But I do want to move on to, I guess, similar things because it's a great chart, I think. When we look at inflows and outflows each week from the CoinShares team, they compiled this. This is the third consecutive week, Imran, of outflows when it comes to crypto investment products. This time, the largest weekly outflow on record, a total of nearly
Yes.
$3 billion, which is a lot of money. But this is always kind of looking back, and so maybe it doesn't give us much insight on maybe whether or not we bottomed post Trump's Truth Social post. but it's a lot of money coming out. And I'm curious what you make of that, because some people are saying this could be, the unwind of a basis trade that a lot of people put on when it comes to, hedge funds getting smart with this stuff. But what do you make of that?
Well, I think the most interesting thing about it is that it shows us that all of that ETF flow that we've seen accumulating over last year is not all in it for the long term, right? If you're buying those ETFs and you're saying, I'm in this for the long term and I need to hold some of this for the next 5 years plus, which is what you can often do, right, with ETFs, decide your allocation for the long term. Clearly we've hit some people's stop triggers there, right? So it just shows that, and this is something Jim Bianco was talking about last year, and saying that a lot of this real money, slower moving flow hasn't been the money that's come into the ETFs. There's still a lot of fast money types that have been using the ETF as an instrument. And like you said, a lot of it was also coming in with the basis trade. So I do think some of it may have been unwinds of the basis trade as well. But yeah, that was the bit that I found interesting. The fact that it's not as sticky money as you might have thought it was going to be.
Yeah, well, I mean, I think, it's always interesting to see people kind of throw these ETF issuers under the bus when the selling's happening, and I don't know, it seems to get lost in that it's not the BlackRocks of the world that are selling. It's everyone who's holding the ETFs and holding crypto through those ETFs that choose to sell. And I would agree. I think that, seeing it dip down under 80 did seem to start to get into kind of a bit of a panic mode. And I did always wonder what it would look like when that unwind starts to happen, and how quickly to the downside, because we did see post-election kind of a pretty strong run-up. And the question was, what's going to happen when all that starts to unwind to the downside? How strong would it be? And without Trump's Truth Social post, I do wonder how strong we would have kept falling. Because outside of that, there wasn't much support. I don't know what you saw in terms of maybe some of that support ever being there. But you had people like Arthur Hayes talking about, I think 70K is what he was eyeing.
Yeah, I think a lot of people were earmarking 70K as the line in the sand, right? Like if it doesn't hold there, then God knows what's happening, right? But even getting below 80K was a bit of a move. I had been waiting for a correction for a while. I did think once we got above 100, the natural thing, the healthy thing would have been to have some sort of correction, but we had to wait a long time for it, right? We struggled to break below 92K for ages, it felt like, and then finally we took that out last week and we went materially lower. So I think in the grander context, it's healthy. A correction was needed. You need to, when you get moves like the move we got post election, you kind of want to shake out some of the weaker hands, right, for the move to continue. So this period of consolidation that we've been in for a while now needed kind of like a crescendo, right? It needed like an end point which would flush out the weaker hands, and I think that's what is going on right now. Now, Trump's tweet obviously acted as the catalyst for the recovery, and that probably happened way faster than that recovery would have happened. It would have been a bit more natural, the move, and it probably wouldn't have been quite so violent. So whether we're done or not, probably at the margin does also depend on what risk assets do. So equity markets are still going through a period of consolidation. Seasonally, if we look at risk assets, if we look at equities, for example, March tends to be seasonally a bit weaker. Volatility tends to be seasonally quite, positive in March. So once we get out of the other side of March, then I think we can feel probably a bit more confident in general of a risk asset rally, and crypto will participate in that, right? Because we should be seeing rates coming down. We should be seeing more liquidity globally as we head into the summer.
Yeah, that's an interesting take. I think I was looking at it too, because by the time at ETH Denver we were on the stage, it was the last day of February, just looking at it, and it was one of the weaker Februaries on record. And especially kind of one of the worst starts to the year since I think 2018. Just a brutal February, just brutal month in crypto in general. And I think maybe even brutal enough to say that Michael Saylor wasn't buying any Bitcoin either. And that was kind of one of the other things that normally is there as a stop, in terms of a backstop for people to be like, okay, at least Saylor's going to come in here buy. No buying to report as of last week, as he said, not selling any shares of Class A common stock, and also did not purchase any Bitcoin. And you could kind of say, I mean, again, this is kind of looking back too, because it was last week, but you had everything that would be bad in terms of no Saylor buy and huge outflows. And again, I just kind of wonder in terms of how bad it could have gotten sans Trump tweet. I guess if you put those things together, Imran, the question is, you know, if you think we'll hold here, or if everyone will start to realize we should be way lower if it weren't for this kind of saving grace Hail Mary that Trump threw out there.
Yeah, I mean that's an interesting point. I do think the market has become a bit reliant on Saylor coming in and supporting the market. That's been dampening volatility on the way down up until last week, where we obviously had a ton of downside volatility. Um, I think it's a question of what is the are we going to shift into a proper bear market, right? And we kind of need the macro to change for that to happen. So as long as the macro remains supportive, and we do see liquidity coming down the pipe, we do see rates getting lower. We do know that Trump is targeting lower yields. He's targeting a lower dollar. So if they get what they want on macro, on kind of policy and the impact on macro, then that should be quite supportive for things like Bitcoin, right? The future of Ethereum and some of the other alts is going to depend on slightly different things. But in theory, they're talking a lot about deregulating the space and making it easier for people to build in the space. So I think it's hard to not think we're still in a bullish regime. But even in bullish regimes, we can get violent corrections. Like you look back at the
Mm-hmm.
history of crypto, 30% corrections are run of the mill, maybe even 50% corrections, right? So it's one of those. If we know that, if we now can see that a lot of the ETF flows were actually faster money types, they weren't these long only, institutions that aren't going to go anywhere and are going to continue to accumulate. If that's not been the change in the investor landscape yet, and that might happen sometime in the future, then we should expect to see 30 to 50% corrections, even in a bull market. So I don't think we need to be overly concerned from a long term perspective.
Yeah, I think. I mean, just pulling up the CoinGlass kind of historical returns here, because looking at the negative 30% start to 2025 now for ETH, as I said, the worst since 2018. And you're right to point out that it's not unusual to see some pullbacks even in a bull market, but I don't know. I mean, I do think that it is kind of a question of which one are we in now. And you're right to point out, and I'm glad we finally have someone on the show who also kind of understands the macro pieces all at play here too, because watching some of the people on Wall Street, like a Steve Cohen, I would put Anthony Scaramucci, the mooch, in that category as well, who are saying, look, some of these things from a macro perspective aren't looking too hot right now when you got inflation coming back up, when you've got the idea of tariffs potentially fueling inflation again as well. You put all those pieces together, and there are some pretty serious players who are now getting particularly bearish. And we know that Bitcoin, ETH, and the rest of crypto don't do so hot when you're dealing with that. And so I wonder if you kind of would agree with me that maybe there are some real concerns here, even if you do have regulatory tailwinds and the idea of a reserve, still potentially, big fears when it comes to macro.
Yeah, but the thing is, though, right, we're in this sort of market where if you do get the economy rolling over. Now, first, I want to address the thing you said about inflation, right? So, the stickier inflation narrative from due to tariffs, if that was real, if that was a big deal, then you wouldn't see bond yields dropping the way they are, right? If the market was really concerned about inflation really popping, then you wouldn't be seeing yields losing like 50 basis points recently, right? So I don't think that is the dominant driver, right? So the dominant driver looks to be some kind of slowdown in growth that is being anticipated because of all of these Doge cuts that are coming through, and just general, market forces.
Mm-hmm.
And that, if anything, that's going to give the Fed cover to cut rates. So we priced practically all the cuts out, right? A month ago we were pricing in like one cut this year. Priced most of the cuts out, and now we're starting to see things that are going to allow those cuts to be priced back in, right? So if we do get Fed cuts, hence we do get more liquidity, that typically is good for crypto, right? It's just that you need something to trigger that liquidity, right? And that is generally going to be weaker growth that gives them that cover. So I think, yeah, you might have these short-term sell-offs as the market gets spooked about various things, but in but over the long run, over the rest of the year, that is what is going to give the central banks the cover to come in and ease and do things that are generally crypto positive, right?
Mm-hmm. Yeah, well, it's good context there, and yeah, I think that makes sense in terms of looking at everything at play. But to shift back to crypto in terms of what we're watching this week, um, it is, as you mentioned, March 7th. That's the day to keep all of this in mind. It's going to be the White House's first ever crypto summit. And I don't know what to expect, Imran. And again, I hope that people don't get too over their skis, but it is going to be David Sachs, the White House AI and crypto czar, leading the charge, as well as
Mm-hmm.
Bo Hines, the executive director of the president's working group on digital assets. And so there is a question of what is actually going to come out of this. I would say that's probably the most pressing thing to watch this week. I don't know if there's something else that you're watching, but it does seem to be the thing that will either continue to put a floor in on maybe the downside moves, or could potentially also trigger some sort of big blow up if it's real and we actually do get news. But I don't know what news they could provide at a summit like this.
Yeah, I mean that is definitely going to be the main crypto specific thing to watch. I think, but I do think to some extent crypto is still going to be correlated to what broader risk assets do, and broader risk assets have got to contend with all of this noise around tariffs. Canada and Mexico tariffs are due to kick in tomorrow. He's going to make some big announcement about that. He's also making some big investment announcement later today, apparently. You've also got the concern of what they're going to do with China and how China are going to retaliate. So all of these factors are going to drive risk sentiment. That is going to have an impact on crypto. But then crypto's got this extra thing that is what they're going to say in the summit. I'll be honest, I don't think they're going to give us anything that concrete in the summit this soon that it's going to create a sustainable pop in the market. They may say things that are supportive and will help us actually hold on to this recovery that we've had. So that would be a
Mm-hmm.
good thing. But I don't see much being announced, concrete things that are going to trigger another 20% upside, like in the near term. I'll
Yeah,
be
I don't
very
really
surprised.
know. I don't really even know if they have. I mean, again, we keep talking about what's the difference between a reserve and a and strategic, asset holdings. There's a big, whether Congress says you can buy with new money more crypto versus just holding what the government already owns are two very different things.
That's huge.
And maybe
That's
maybe we'll
that's a
get
huge thing.
yeah, maybe we'll get some more insights into all of that. But I'd be remiss, Imran, before we wrap up here, if I didn't give you a shout out for kind of what you've been working on too at Options Insight. And Darabit, obviously, also a big supporter of what you're doing over there. But on the options
Mhm.
side, I feel like, people, it's a trickier thing. And obviously in crypto, I think people have gotten more excited by it. And post GameStop, there were a lot of options excitement and people playing with that. But real quick opportunity to really throw out kind of what you're focusing on over there and what people should know about options.
Sure. Great. Yeah. So crypto options are growing like massively, right? They're becoming huge. They trade in massive size, massive volume. Deribit, obviously the leading exchange globally on that, hasn't been open to US investors though, for regulatory reasons. But that might change with the new administration as well. So hopefully that will change. But talking about the kind of sizes that are trading there, last week we saw over $20 billion notional trading in options in Bitcoin alone,
Mm-hmm.
right? Which is massive. It's one of the biggest volume weeks of the year. Um, and there's lots of liquidity on there. I trade actively crypto options. I have been since 2020. I have various systematic strategies that I run, whether it's income generation strategies, whether it's hedging strategies. So, for example, if you've been long crypto since 2020, you've done pretty well, right? But you might be looking at it at 100K and saying, I want to hold on to my crypto, but I'm a bit nervous that the market's looking pretty toppy here and it could easily correct. And you would have been
Mm-hmm.
absolutely right in thinking that. So the beauty that some of the strategies we employ on the hedging side allow you to do is that you can, for example, maintain your upside in Bitcoin up to another 20,000. So let's say it's at 100,000, you could put on a risk reversal or a collar, as it's called in the US, where you sell the 120K calls and you use the premium from those to buy maybe the 80K puts, and it costs you nothing to do that. It's a net flat premium trade. So you still have another 20% upside on your Bitcoin from 100K to 120K. But if it cracks lower down to 80, you've got some nice P&L coming your way to cushion the fall in your holding. And then you can then monetize those hedges and go back to your natural state, which is just to be long Bitcoin. But you've managed to survive a drawdown and not give all of that 20%, whatever the correction is, you haven't given all of that back, basically. So that's the kind of stuff we structure at Options Insight for our members to teach them how to do that. And it's purely an education service. We don't run any of our members' money, but I run my own money. And I basically show anyone who's my member what I'm doing, why I'm doing it, and teach them through the process to kind of show them how someone who's traded options for 20 years manages their money effectively. Right?
Yeah, no, very, very cool. Honestly, as a community-owned show here with our Dow Treasury mostly in ETH, would have been good to have a conversation with you before we saw this complete fallout over the last month, because things were fine before, but a huge downside move in ETH. Not so great for the coinage Dow Treasury anymore. But Imran, I appreciate you coming on here, man. This is very fun to have you on this show and to get a little bit of good market flavor, not just crypto all the time. A little macro thrown in there as well. But appreciate you coming on, man. It was great to have you on.
Thanks for having me, Zach. It's a pleasure to meet you, mate.
Yeah, for sure. And hopefully we have you back on too. And for anybody who's not so familiar with options, highly recommend going out, checking out Options Insight as well. The founder over there, Imran Lakha, on Coinage with us. Appreciate you taking the time, sir. As always, thank you to everyone else who's watching us here today. You can check out the biggest headlines in crypto and Web3 at coinage.media. And if you want to own this with us, you can head to coinage.media to mint and become a member as well. With me, the co-founder of Netflix, and everybody else in our community. That'll do it for Imran, for myself, for everybody here at Coinage. Thanks again for tuning in. We'll see you again soon.